January 12th, 6:30 call. It's up here. I am going to show the highs on the contract. The contract high on 12/13. The high was 27.60 right here. We are currently had made lows down here at 16.20 on 12/14. Today's date's 12/18, and this is a contract 6:30 call. It expires in January. Markets, depending on what Google does in the following week, is the 6:30 call is not totally at wholesale. They're tradable on an intraday level now, but as far as holding overnight, they're still not deflated. They were deflated over here at $8 a contract. That ran up to the highs up here now at $27. That was when they were deflated. They're not in a deflated zone. They're in a tradable zone on drop down bids on an intraday level. But we're looking at that 6:30 call up and out of the money. We're also going to take a look at below the market. We're taking a look at the 6:20 put as well, January. And we can see that the put option here is getting down toward our deflated low levels down here. A lot of the risk has been taken out, about $40 of the contract. Now, we will decide which side of the market, if Google is going to reverse and start to break below 621.50, then we will start looking at making this transaction. On the other hand, the upside can be bought, but it has to be sold into the upside movement. So if I buy at the low, then when it does make the move, I got to be a constant seller. These are, yes, these can still go higher in value, but just remember one thing you've been taught, MMTs, this side is more deflated and this side is yet to deflate down to the $10 level here. We'll find out on the Christmas week trading week of what the volume is like and where the values of the call, 6:30 call, and a 6:20 put. I will also throw in there the up and out of the money call called the 6:30 call, which is right there, but there's another up and out of the money one that I feel is still overvalued. This is not, never was undervalued. I mean, you're talking about price levels that were here. This is up and out of the money 6:40 call. This was the retail values up here, and they're only in the midsection of the value. If Google was to pull back and sell down with the market, then these calls would drop down where they would be buyable eventually. They're at the higher risk level. And another thing I'm going to throw in here on the bottom chart is the 625 put that expires on 12/23. That's this one right here. And in the short term, the put's been marked from $10 down to $5. That's the current December 23rd, 625. That's currently after strike. When you take a look at the 625 call that expires this coming Friday, that hit 950 on the high. This is a weekly contract, and pricing are totally different. So we're going to be watching this side of the market as far as the 625 call for the weekly chart right here. Okay, so there's a 640 call up here for January. This is for the 23rd of December contract, calendar year end. And basically another thing we're going to be looking at is, like I said, is in the shorter term, we would also take a look at this put option here, which is a 620 put right here. And that it hit a low market, and it has a weekly range already. And here they are. There's your cap. So there is ranges to be bought and sold in here on the 620 put for the weekly as well. I'm going to conclude the fact that we have all the various strike prices. The old, this is the 12/23 call and put structure going all the way down. We will make good of it during the intraday level throughout the calendar year. Google call and put strategies and call and strike prices, inflated versus deflated, trading ranges versus retail and wholesale ranges.